Namaste everyone. Welcome to my channel. As I promised in my last video that I will be taking up a video on tax benefit or the capital gain tax benefit which you can get under section 54 EC. So today I'll be talking about what is the benefit of tax you will get under this section and what kind of investment you need to make, what are the conditions to be met, and who can avail this benefit. So to start with it, the first thing, who can avail this benefit? Who can avail the deduction? So every SSC can avail this deduction. And on what amount can they avail the deduction? They can avail the deduction for any capital gain made by the sale of immovable property or sale of shares, which are long-term in nature. What do we mean by long-term in nature? That means they must have hold that period to qualify as long-term for a longer period than the short-term. Then it becomes a long-term property or long-term shares or long-term capital asset. When any SSC sell these assets, let's say they holded a property for 4 years or 10 years, or they holded any mutual fund or shares for 10 years, and they want to sell that off now for any particular reason. Maybe they are getting good price for that, good sale value for that, or they have any requirement and they want to sell off. So when they sell their property or their long-term capital asset, they will attract some profit and capital gain. How? Because they will be selling the property or the capital asset at a higher value than their purchase cost. So the difference between the sale proceeds and the purchase cost of that property or that capital asset will be the capital gain on which they have to pay tax. And to support the taxpayer, what income tax government have done? They introduced this section called 54 EC, in which there is a condition that if you make investment in any capital bonds which are qualified under section 54 EC within 6 months of the sale date, then you can get the deduction of that much amount from your capital gain, and the balance you will require to pay tax. Now I will show this with a small calculation which is there on my screen. I hope you can see it. Capital gain tax calculation on sale of immovable property after investment in 54 EC capital bond within 6 months. So what does that mean? You can get the benefit of this section only when you invest the sale proceeds and in any capital bond within 6 months of the sale date. So let's take an example. Let's say there's a person named Anshul and he sold his immovable property. Now, this is just an example of immovable property. It can be for shares as well. So let's say Anshul sold his immovable property, which he hold it for 15 years, and he sold it for 90 lakhs. And his acquisition cost after indexation was 49 lakhs. And he had made some improvement in the property. And after indexation, the cost was 12 lakhs. So these two has to be reduced from the sale proceeds to see how much long-term capital gain is attracted towards this sale. So after deducting, we get the balance of 29 lakhs. Now on this 29 lakhs, Anshul has to pay tax. Because as we are aware that on any income you make, you have to pay tax to government. Similarly, since this is a property income, this is a capital gain income, Anshul also has to pay tax on this 29 lakhs. However, there is a way to reduce the tax on 29 lakhs. How is that possible? What did Anshul do? Anshul invested in capital bond issued by National Highway Authority of India within 6 months of the sale of immovable property. And how much value did he invest? he invested for around 18 lakhs. So now how much tax he has to pay? He has to pay tax only on 11 lakhs, which is nothing but 29 lakhs minus 18 lakhs. So he gets straight away, he saves the tax of for 18 lakhs by just investing that amount in the capital bond. Now there is one more condition. There is an upper cap on the deduction also. You can claim this deduction only up to 50 lakhs, not more than that. So let's say you have made a profit of 80 lakhs, and out of that 80 lakhs, you invested 60 lakhs here. And you will think that you will only have to pay the difference of 20 lakhs, 80 minus 60, because 60 you invested in the capital bond. So only now on 20 lakhs you have to pay the tax. No, the case is not that. You have to pay tax on 80 lakhs minus 50 lakhs because 50 is the upper cap. You cannot claim deduction more than 50 lakhs under section 54 EC. So this is a very good way of reducing your capital gain, long-term capital gain tax. Okay. Now I'll talk about some of the questions like generally asked by my clients. What is the lock-in period? What if I withdraw money before the lock-in period? So there is a lock-in period for these capital bond. When first condition is you should invest in the capital bond within 6 months of the sale date. Next condition is that there will be a lock-in period of 5 years for this capital bond investment. That means once you have invested, you cannot withdraw the money before 5 years. Only then you get the tax benefit of this deduction. Now, what will happen if you withdraw the money or close this bond? You want to redeem this bond. What will happen? If you withdraw the amount before 5 years of the lock-in period, whatever tax benefit you got, you will have to pay tax on it in the year in which you withdrew that amount. So in our case, since he had taken the benefit of 18 lakhs by investing, he will have to pay tax on 18 lakhs in any year which he withdraws that amount before 5 years. Now, some of the other questions are, what is the interest rate of the bond? If I'm investing my money in any capital bond anywhere, an investor would always expect some return. So what is the return percentage on that on a yearly basis? So interest rate of bonds specified under 54 EC of income tax is 6% per annum. And what will happen if a taxpayer invests in a bond after 6 months? Like within 6 months, he was not able to do, and after 6 months, he did. So will I not qualify for the deduction? You will qualify for the deduction at specific condition. Like if you really have a genuine reason that you are not able to invest within the 6 months of the sale date, and if it is satisfied, if the assessing officer gets satisfied with your answer or the genuinity, then you will get the deduction after 6 months as well. A very frequent question also asked is, can I claim an exemption under 54 EC in respect of short-term capital gain? So the answer is, as the name itself suggests, 54 EC is a tax deduction applicable only for the long-term capital asset and not for the short-term capital asset. So I hope this video was helpful. And if you have any further queries, you can write to me in the comment and I will try to cover them up in my upcoming videos. And although issuance of 54 EC bonds has been stopped, has been discontinued, however, people who have already invested money in the capital bond earlier, this benefit they still can avail and they still are eligible to get the deduction. So I hope the video was helpful. Thank you so much for watching. Have a great day. Bye-bye.